Welcome, this is Simon from Strategize Financial Modelling. Today I'm going to present you with a base carbon reporting model as discussed in my article Carbon Modelling and Analysis on the strategizefm.com website. I'm going to show you firstly the table of contents to give you an overall idea as to how this model is constructed. We have time series assumptions, model specific assumptions, operational and equity based assumptions, reporting carbon under operational control or under equity or financial control. Then obviously the outputs, my reports, then dashboards, and at the back of the model will be ancillary worksheets such as model import sheets, lookup tables, and error sensitivity and alert checks. I'll take you to the assumptions area because this is how the model is driven and operates. Now I have 24 actual periods of data and we're starting on the 1st of January 2010. Now when I mean model specific, this is the beauty of a best practice carbon model, is that I can easily change the names or update information in this one repository source rather than having to randomly and unsystematically go through my whole model and change data. With carbon reporting, it is imperative to maintain a uniform reporting structure, and hence I'm showing my energy, electricity consumption and energy production using a base unit of measure, gigajoules. However, under certain reporting schemes such as sustainability report, you may want to report using a different unit of measure. So this model enables you the flexibility of doing that. Under carbon reporting, you have to document your energy consumption by each fuel type, and this is what this model goes into detail with. It also gives you immense room to expand and embellish the model going forward, and as you can see, there's plenty of room to add additional energy consumption types in the future. Now with obviously energy consumption and emissions, you need to have the relative energy content factors and emission factors, which these are all presented here in the model. One important aspect is to ensure you have some sort of unit conversion, because one of the disciplines of carbon reporting is to ensure that you, as I said, maintain a systematic uniform reporting metric, and as I showed you further up the page, your source data may be in gigajoules, but say in sustainability reporting you may want to report under terajoules. So having a little table such as a unit conversion chart is a very powerful tool to assist you in moving from one unit of measure to another. The last assumption sheet is operational and equity basis. In terms of operational control, this may vary across not just your business units, as you can see here, but also across different assets. So for example, the Western Lake generator under our electricity generation business unit is not actually under the company's operational control until January of 2011. So having this kind of flexibility in the model provides additional value add reporting power to management. I'll now present you with the outputs. So as you can see, we have our energy consumption, by stationary type, and by broken down by each business unit, and then by each asset under that business unit. It's, as you can see, and as I discussed in the article, it's obviously very, very detailed, this this model. But once the model has been built, it's very easy and seamless to maintain and update it on a month-by-month basis, as we can see here. So it's very important to set aside the time and maintain a disciplined approach when building your carbon model, because as I discussed in the article, the nature of carbon reporting is such a nascent area still that if your company can kind of be ahead of the curve and have some sort of reporting discipline such as this in your company, then it will certainly help in the future for you. I move across into electricity consumption, which obviously forms part of the overall total energy consumption of the company. Once again, broken down by business unit, by facility, and obviously the consumption is driven by, and the emission factors driven by the respective provincial emission factor, which is based on the average emissions from electricity purchased from the grid. Evidently, Quebec, having a high reliance on hydroelectricity, has a much lower emission factor than, say, over in Western Canada. So I now show you the energy production, once again, broken down by business unit, fuel type, then obviously the asset. And then I take you to emissions by scope 1, which is your direct energy consumption. Once again, we're maintaining this regimented detail of portraying energy emissions broken down by each fuel type. Another area to really add value to your company is to feed in your company's financials, high-level financials. It doesn't have to be too detailed, as long as you have simple earnings from your finance department, then this is an additional value add that you can bring to carbon reporting, as I'll show you in a moment. So we've got our base outputs. I'll take you back to the table of contents. We'll firstly discuss sustainability reports, and we're looking firstly at our first business unit, which is capital projects. Now, the beauty of these output sheets is that they provide a high-level summary of your energy consumption by each asset, and then giving you your overall energy consumption total for that business unit. As you can see, we've got energy consumption, electricity consumption, total energy consumption, which obviously will drive out scope 1 direct emissions, energy production, scope 1, then scope 1 emissions, scope 2 emissions, which is electricity purchased from the grid, then our overall emissions, scope 1 and 2. Now, depending on the business unit, there's certain metrics that management will like to see, and one's an emissions intensity, which can kind of give an idea to management as to which assets are more emissions intensive than others. As you could expect, a hydro plant has minimal emissions relative to our Red River project, which is a more kind of standard fossil fuel generating asset. Now, one metric I think is a good one to adopt is a carbon financial reporting metric. Now, I'm using earnings before interest, tax, EBIT, because this can show you relative to $1 of carbon liability, how much earnings it's generating. Now, as you can expect, given the low emissions of a hydro facility, such as our Great North Hydro Plant, relative to, say, our Red River project, as I've discussed, the multiplier impact on earnings is much greater and better with hydroelectricity. So this is under operational control basis. And I've also presenting it under equity or financial basis as well. Where I mean is if you mainly own, as I'll show you, you mainly own you may own 100%, or you may only own, say, 67%, as is the case with Red River project. Or depending on timeline, your equity portion actually may go up or may go down. So the great thing about this model is that it gives you the flexibility to report in a very concise and high-level manner your numbers, carbon numbers. Similarly with our electricity generation business unit, as you can see, we've got our relative high-level summaries, and the same with our corporate website, our corporate business unit, which, as you can imagine, is essentially more of an overhead rather than a revenue generator for the company. Now, take you to the dashboards now. One, management always want to see something high level, and providing something like this is what they're going to want to see. And also providing some sort of value-added analysis, such as this simple waterfall chart, which helps to conceptualize and in a very efficient manner explain why, for example, capital projects business unit overall intensity has gone up from 2010 to 2011. And as we can see, it's driven primarily from our Project Delta and Project Eagle assets, whilst being offset in part by our hydroelectricity plant, Great North Hydro Plant. Similarly, with our electricity generation site, we can see that our emissions intensity has gone up slightly, again driven by our XRT generator and Western Lake generator assets, which has been partly offset by our hydroelectricity facilities. So that's essentially, in a nutshell, a base carbon model which you can establish for your company. In later posts, I'm going to provide a bit more kind of detailed analysis, such as undertaking carbon forecasting, more high-level analysis such as waterfall charts, to show you the power of carbon reporting models. Thank you.